Imagine this. You die tonight. No warning, no savings, no life insurance. Within 24 hours, your family isn't just grieving, they're being handed bills. A $15,000 funeral invoice, a $3,000 medical bill from the ER, and debt collectors who don't even wait for the funeral to end before calling. While your friends post RIP on Facebook, your family is on GoFundMe, begging strangers for money just to bury you. This isn't a horror story. This is America, where dying without life insurance isn't just tragic, it's financially devastating. Today we're breaking down exactly what happens in the US when someone dies with zero life insurance. Who pays? What debt gets passed on? What the government does not cover, and why so many families fall into the deepest financial hole of their lives on the same day they lose the person they love. Because if you think I'll be fine, trust me, your family won't be. When someone dies in America without life insurance, the first shock hits instantly. The cost of the funeral? Most people don't realize this, but funerals in the United States cost more than in nearly any country on earth. The national average is $7,000 to $15,000. Depending on where you live, and oftentimes, they don't. This is why GoFundMe has unintentionally become the largest life insurance company in America. More than 125,000 American families create funeral fundraisers every single year. 1 out of every 3 GoFundMe pages is created because someone died with no coverage. Most don't reach their goal, and the ones that do often barely cover the funeral, leaving nothing for outstanding bills or debt. Imagine grieving the loss of your mother or father and then being forced to post on the internet, "Please help us pay for the funeral. Anything helps." It's humiliating, painful, and common. But that's just the beginning. After the funeral expenses come the bills that many Americans falsely believe disappear when someone dies. Medical debt almost never vanishes. If the deceased spent even a few hours in a hospital or before passing, you could be looking at thousands of dollars owed. And the hospital will aggressively pursue the estate and sometimes the family to recover it. Many families learn this the hard way. They check the deceased's mail days after the funeral and find a $2,500 ambulance bill, a $4,000 emergency room charge, or a $1,200 doctor's invoice. If the estate has money, it must legally be used to pay these bills before anything goes to the family. If the estate has no money, some debts remain unpaid. But some medical providers still try collecting from relatives, hoping they don't know their rights. For a grieving family, this is overwhelming. But the financial nightmare doesn't stop there. Outstanding rent. Someone has to cover it. Car payments? They don't stop. Mortgage? If the deceased owned a house, the lender still expects payment. If the family can't afford it, foreclosure becomes a real threat. Even when family members want to keep the home, they're forced to take over the mortgage instantly, whether they can afford it or not. Dying without insurance exposes a painful truth. Grief doesn't pause bills. Creditors don't pause bills. Landlords don't pause bills. Life keeps moving even when you can't. One of the most misunderstood parts of dying in America is how debt works. Many people believe their kids inherit their debt. In most cases, that's not true. Debt typically dies with the person unless it's a joint account or co-signed. But, and this is the part nobody talks about, the estate must be drained first. This means any savings, vehicles, valuables, or property must be used to pay off debt before family members receive anything. It means generations lose whatever little wealth they might have gained. A car you hoped your son would drive, sold to cover outstanding bills? The small house you spent decades paying off? This could be taken to satisfy creditors. No insurance means no protection for anything you worked your entire life to build. And then comes the biggest burden of all: lost income. If the person who died was contributing money to the household, even a small amount, that income is now gone. Families don't just lose a loved one. They lose financial stability. A single-parent family losing the only earner is catastrophic. A married couple losing one income is devastating. Grandparents raising grandchildren? Even worse. Life insurance was created for this exact purpose, not to make someone rich, but to replace lost income so the family doesn't collapse. Without it, many families are forced to move out of their home, take on multiple jobs, delay school, sell possessions, and completely rearrange their lives. This is why funerals are only the first expense. The real damage hits the months and years after. But none of this is new. The United States has one of the most expensive and devilized systems on the planet. Americans pay more for funerals, more for medical care, more for housing, and more for debt than almost any developed country. And yet, the country also has some of the lowest rates of life insurance ownership among middle and lower income families. It creates a dangerous cycle. People think they can't afford insurance, but they also can't afford to die without it. And the people who need insurance the most are often the ones who have the least protection. Let's talk about the emotional side for a moment, because this part rarely gets discussed. When someone dies unexpectedly, the family wants time to grieve. But money forces them to switch into crisis mode. Instead of mourning, they're arguing about who pays what. They're filling out paperwork, making calls, borrowing money, asking friends, fighting with funeral homes, trying to negotiate with hospitals. Stress levels skyrocket, relationships break. Funerals become a financial argument instead of a moment of love and remembrance. And the pain of that never fully goes away. Many people carry guilt for years because they couldn't afford a nicer funeral for their parents or spouse. No one deserves that. The saddest part, most of this is preventable. Oh, even a small policy like $10 a month can cover a cremation. A $30, $50 per month policy can completely pay for a funeral and leave something behind for bills or children. But millions skip it. Not because they don't care, but because nobody explained how expensive dying truly is. In school, no one teaches this. Employers don't talk about it. Banks don't explain it. So people assume it's not urgent, until it is. And by then, it's too late. Now imagine a different scenario.
Oh, yeah.
Imagine the same person passes away, but this time, they had even a basic insurance policy. The funeral gets paid instantly. No. GoFundMe. No begging, no stress. The family has money to breathe, to focus on grieving, to support each other, to pay bills, to keep the home, to avoid debt collectors, to move forward. Life insurance doesn't fix the pain of losing someone, but it protects the family from being financially crushed. That is one of the last gifts you can give the people you love. The truth is simple. Dying without life insurance in America is not just a personal choice. It's a financial bomb that explodes inside your family's life. The funeral, the debt, the medical bills, the lost income, the shock. It all hits at once. And the people left behind are the ones forced to pick up the pieces. Millions of families experience this every single year, quietly, privately, and painfully. And most of them say the same thing afterward. I wish we had talked about this sooner. So if you're watching this right now, consider this your wake-up call. Not for you, but for the people who depend on you. Ask yourself honestly, if something happened to you tonight, would your family be financially okay? Or would they be scrambling, panicking, taking loans, setting up a GoFundMe, and drowning in bills while trying to plan your funeral? Because your answer to that question determines everything. Life insurance is not about death. It's about protection, love, responsibility, and leaving your family secure instead of struggling. And if you want your last moment on earth to be the moment that pushes your family into debt, then take action now while you still can. If you want a full breakdown of the types of life insurance, which ones work best for Americans, and how to avoid being overcharged, check out the next video. Because understanding this could save your family thousands of dollars in a lifetime of stress.